The IPO of Orient Technologies is now open for subscription starting this Tuesday. The shares of the IT solution provider are being offered at a price of 195 to 206 rupees per equity share, valuing the company at rupees 858 crore post issue. What's interesting here is the valuation the company is seeking. After the IPO, the stock will have a price to earnings or PE ratio of 20.7, which is quite attractive compared to its peers' median of about 25.9. And let's talk the timing as well. The launch of this IPO couldn't be better. The IT sector, remember, has been facing some tough times recently with flat revenue growth and shrinking headcounts over multiple quarters. However, with growing optimism around potential rate cuts in US and India, which could lead to increased client spending, IT stocks have already started to rally. In fact, the Nifty IT index, which tracks the performance of India's IT sector, hit a record high just yesterday on August 20, fueled by this positive sentiment. So with the IT sector starting to show signs of a rebound, is Orient Technologies a good bet as it makes its debut on the Lal Street? To help us break this down, we have Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us. Gaurang, what's your take on the Orient Technologies IPO? The stock appears to be reasonably priced, and with the IT sector showing signs of a recovery, do you think the issue is worth subscribing to?
So, as a disclosure, prudent to give a disclosure on Orient Technologies, we have subscribed coverage on Orient Technologies from a long-term point of view. Couple of points that has made us inclined towards give a subscribe recommendation to the IPO notice. Of course, one of them, like you rightly mentioned, that the valuation price band between 195 to 206 is fairly valued. We have advised our clients to subscribe to the IPO at the higher price band. The other thing that has made us inclined towards give a recommendation is that the large portion of the IPO proceeds is going to go towards expansion of business. This company was established in 1997 in Mumbai, headquartered in Mumbai, and the services that they provide looks to be incrementally value accretive in terms of the outlook of business, especially to those segments where the companies or the startups cannot afford to go and invest in capital expenditure. They would do the expenditure over there and then possibly take care the back end, take care of it. And they're also specialized into various verticals. So our sense is that, I mean, not from a listing gains point of view, but if you're looking at investment from a long-term time horizon, Suyash, then we would give a subscribe at 206. That is the higher price band.
Gaurang, the company derives most of its revenue from domestic markets. I mean, do you see this as a positive since it could insulate the company from global headwinds, or perhaps a negative because it limits their exposure to more lucrative international markets like North America and Europe?
So I think having exposure to overseas market has its own pros and cons, Suyash. Uh, the fact that India is a growing market, and as far as the technology part of growth is concerned, the government focus is also there to push technology as one of the platforms wherein the growth can come through. So being a large part dependent on domestic business is something that we are excited about. But the management, I was listening to the management this morning, and they also said that as they go into the future, they are not adverse towards exploring the possibility. But I think there is plenty of opportunity in our own geography. So that's something that is looking quite good. Of course, other than that, they are into BSFI, IT, healthcare, pharmaceutical, diversified platform and solution provider company. Hope they will do well in terms of earnings visibility.
What's your outlook on the IT sector on the whole? Do you expect better times ahead with rate cuts potentially in the offing?
So, Suresh, I think I did a show with your colleague Krishnan, if I'm not mistaken, about a fortnight back. It was post the Cognizant announcement of the salaries that were offering. And I had mentioned at that time, even long time back, we've been interacting on various platforms, Suresh, including your channel. We've been positive on the IT sector and we remain positive on the IT sector. Our sense, Suresh, is that on the earnings front, I think the momentum will pick up in the second half of FY25, that is third quarter onwards. I think you will see more and more improvement coming in, both locally as well as globally. businesses, who are dependent on US and Europe, I think the environment is turning conducive. Budgetary cuts or discretionary spends have now become a thing of the past. It has gone in the rear view, and there'll be opportunities coming out from there. So let's hope that our assumption falls true in terms of turnaround in second half of FY25.